Well, these back and forth tariff headlines have been rolling in today as the U.S.-China trade war continues. The Wall Street Journal first reporting that Trump administration is considering cutting the tariff on China to between 50 and 65%. Then U.S. Treasury Secretary Scott Bessent told reporters that, as we've been hearing from our Jennifer Schonberger, that President Trump is not offering to unilaterally take down U.S. tariffs on China. Joining us now, Shehzad Qazi, International Managing Director at China Beige Book. Shehzad, thank you so much for being here. So you are steeped in the Chinese economy. And so I'd really love your take on the positioning of these two global powers, given what's going on in their economies. What I find fascinating through all of this is, we keep hearing Trump and Xi are going to directly negotiate. What are they waiting for, right? What's the holdup? Why can't they, just get on the phone and get on with it already?
Well, I don't think Trump and Xi are going to negotiate directly at all, because that is not something that Xi Jinping would want to do. It's incredibly risky that he has a phone call with President Trump, puts the phone down, and then a truth goes out announcing some action on China. So they are not going to do that. The meeting with Xi is always going to be a prize that's going to come at the end of a deal, not something that's going to kickstart the process.
That's really interesting. So does that mean then that we are at an impasse because that is the only way that President Trump will negotiate is with Xi directly?
So both sides certainly do want to have a conversation and do want negotiations to start. And this could absolutely begin, for example, from the U.S. Trade Representative's office, which is very, very high up. And the USTR, of course, has had conversations with He Lifeng, who's a vice premier in China. So there is room. I think both sides want to make it seem as if the other is conclusively folding for this to begin, which is why you're getting this impasse right now.
So it's clear kind of both sides. No one wants to probably show their cards or really kind of show any signs of sort of a weakness. But so where does it go from here, right? Because we're hearing a lot of chatter, but from an investor's point of view, not really a lot of action.
Yeah, look, I think there are several off-ramps on this U.S.-China front, and there are other non-trade related things that could actually kick this off. Fentanyl cooperation and conversations are still going on, so there could be more action over there. Of course, there is a TikTok deal that is now been put on ice, but a resumption on the TikTok deal front could also be a way for U.S.-China negotiations to begin. So there are, a few avenues that are available if either side wants to take advantage of them.
Okay, so let's take the headlines that we got today or in the last 24 hours. The president himself last night also expressed some willingness to negotiate on that 145% tariff, that it wasn't sustainable. But we saw the markets obviously take off today. Are you encouraged by what you heard today, or do you think that it's sort of a mistaken reading?
Look, I think markets need to understand right now the base case is that you get a series of mini deals between the two sides. The idea of a big U.S.-China deal where China is going to make structural adjustments to their economy and the trade deficit between the two sides are going to disappear, all the rest, that is not going to happen. I don't think that's ever going to happen. It's certainly not even going to happen within the 2 to 3 year framework that the Treasury Secretary laid out.
Wow.
So basically, one thing people should be looking for is sort of maybe these kind of mini deals, right? So I guess is the bigger point here that everyone's focused on trade, these huge tariffs that essentially are stalling sort of these two major economies, but actually there's sort of some small steps along the way that actually investors could cheer for?
They can certainly cheer for that, but then they have to wrap their heads around the fact that that leaves the situation and the relationship still quite volatile to additional conflict, because I think it doesn't resolve the fundamental problems the two sides that they have with each other, and I think a lot of those problems cannot be resolved. I think altering the trade relationship with China is probably the only way forward. Markets are probably not going to enjoy that in the short term.
And it still sounds like, the officials involved have called this an effective embargo, right? Where you could be seeing flows of goods just stopping entirely. Some seem to have already. So this does imply that we could, for the foreseeable future, see product shortages, for example. Americans not able to get certain things from China. And that doesn't seem like it's going to change, at least not, even maybe as we get these mini deals.
There's been a ton of front loading, but as soon as that stock starts to get depleted, absolutely shortages are going to become a big problem, which is why I think there's also pressure on the administration to not only just strike deals, but see what supply chains can get moving from other countries, what can be done by Mexico also, by the way, what can be done by Vietnam, and so forth. One other additional point. We all talk about Chinese transshipment, so-called China rerouting, it goes through other countries. That's really the primary mechanism through which China is going to still be relying on. I don't anticipate a lot of crackdown on that happening right away, and that really may be a bit of a silver lining for consumers in the short run.
And as we look at the backdrop here, as I mentioned at the beginning, you are very steeped in the Chinese economy. It seems like they are prepared to hold fast on this. How much leeway do they have to do so? How much leverage do they have?
Well, they have quite a bit of ability right now to support the economy. They haven't done any kind of true large-scale stimulus for several years, despite expectations on the street. So they could begin unrolling some of that, providing support to their export economy, the industrial base, providing some amounts of support to consumers, although we'll see just how big they have the capacity to go, in order to make sure that the economy can be as quote-unquote stable as possible, because they are looking at a pretty serious economic downturn with the trade war being where it is right now.
Yeah, Shehzad, really interesting insight. Thank you so much for being here. We appreciate it.